Hello everyone. Today I'll be considering the net worth of top 5 airlines. The net worth of top 5 airlines. Determining the net worth of airlines can be complex as this term may refer to various financial metrics such as market capitalization, total assets or equity value. Below is a list of the top 5 airlines based on market capitalization. First is Delta Airlines with a net worth of $34 billion. Number two, United Airlines Holding with a net worth of $18.1 billion. Number three, Southwest Airlines with a net worth of $16.7 billion. Number four, Turkish Airlines with a net worth of $13.8 billion. Number five, Lufthansa Group with a net worth of $8.7 billion. These figures are based on data from Forbes Global 2000 list and other financial sources as of May 2024. It is important to note that market capitalization is influenced by various factors, including stock market performance and investor sentiment, and can fluctuate over time. Delta Airlines. It is a leading US airline headquartered in Atlanta, Georgia. As of January 8, 2025, its stock price is approximately $61.42 per share. $61.42 per share. Let's have a look at its recent financial performance. For the September quarter 2024, operating revenue was $15.7 billion. Operating income was $1.4 billion with an operating margin of 8.9%. Pre-tax income was $1.6 billion with a pre-tax margin of 10%. Earnings per share was $1.97. Operating cash flow was $1.3 billion. Total debt and finance lease obligations was $17.7 billion at quarter end. For the full year 2023, operating revenue was $58 billion. Net income was $4.6 billion. Total assets was $73.6 billion. Employee count was approximately 103,000. Passenger load factor was 85% and fleet size was 958 aircraft. Growth projections. Data anticipates a 3% to 4% capacity growth in 2025 with mid-single-digit revenue growth and low single-digit non-fuel unit cost growth year over year. The airline projects a 10% annual growth in earnings per share over the next 3 to 5 years, driven by increasing demand for premium services. For the market position, Delta is recognized for its extensive domestic and international network, premium service offerings, and strong financial performance. The airline continues to invest in expanding its premium seating products, which are expected to become a significant revenue driver in the coming years. The second is the United Airlines Holdings, which is a major American airline holding company, and it is headquartered in Chicago. Recent financial performance. For the third quarter 2024, net income was $965 million. A 15% decrease was noticed compared to the same period in 2023. Revenue was $14.84 billion, a 2.5% increase year over year, surpassing analyst expectations. Earnings per share was $3.65. Operating margin was 10.5%. Share buyback program. It authorized up to $1.5 billion, marking the first repurchase since 2020. Labor costs increased by over 10%, while fuel expenses decreased by a similar margin. Passenger load factor was 83.9%. Fleet size 945 aircraft. Employee count was approximately 103,300. Number of passengers 165 million. Market position and outlook. In 2024, United Airlines stock experienced significant growth with an increase of over 130%, outperforming major technology companies. Analysts attribute this success to strategic investment in network expansion, fleet modernization, and enhanced customer experience. The airline is well positioned to benefit from increased corporate travel, domestic market share gains, and the maturation of international routes. The maturation of international routes. Despite challenges such as Boeing's production delays, United has effectively navigated these issues by leasing aircraft and focusing on its robust hub structure and international operations. The airline's strategic hub locations in large population centers and its emphasis on premium seating and long-haul flights have further strengthened its performance. Looking ahead, United Airlines is expected to continue its growth trajectory, supported by strong demand, strategic investments, and a favorable supply-demand environment in the airline industry. Analysts project solid earnings growth into the next few years, with the airline's diversified revenue streams and modern fleet playing key roles in its ongoing success. Playing key roles in its ongoing success. The third airline I'm going to consider is the Southwest Airlines, which is a major American airline headquartered in Dallas, Texas. It is renowned for its low-cost carrier model and extensive domestic network. Renowned for its low-cost carrier model and extensive domestic network. Recent financial performance. For the third quarter 2024, operating revenue was $6.87 billion, a 5.3% increase year-over-year. Net income was $67 million, a 65% decrease from the same period in 2023. Profit margin was 1%. It went down from 3.1 in Q3 2023. For the second quarter 2024, operating revenue was $7.4 billion, marking an all-time quarterly record and a 4.5% increase year-over-year. For the revenue per available seat mile, it decreased by 3.8% compared to second quarter 2023, and this was primarily due to industry-wide domestic capacity growth outpacing the demand. Strategic developments. The first here is sale and leaseback agreement. In January 2025, Southwest entered into a sale and leaseback deal for 36 Boeing 737-800 aircraft with Babcock and Brown Aircraft Management. This move aims to generate cash and improve financial standing, with the December 2024 sale of 35 jets yielding $871 million and an expected $92 million in fourth quarter profit. For the board restructuring, in November 2024, Southwest reached a settlement with Elliott Investment Management, resulting in significant board changes. 6 current members, including Executive Chairman Gary Kelly, retired, replaced by 6 new directors, 5 of whom were Elliott-sponsored candidates. Rakesh Gandwal, co-founder of India's Indigo and former senior executive at United Airlines and US Airways, was appointed as the new chair of the board. Strategic initiatives. Southwest announced plans to enhance revenue by adding premium seats, assigning passenger seats, and forming partnerships with international airlines. In September 2024, the airline announced its first partnership with Icelandair, aiming to expand transatlantic connectivity. Market position and outlook. Despite challenges, including increased labor costs and competitive domestic markets, Southwest continues to adapt its strategies to maintain profitability. The airline's focus on operational efficiency, fleet optimization, and strategic partnerships positions it to navigate the evolving aviation landscape. Number 4, Turkish Airlines. Turkish Airlines. This is a major international airline based in Istanbul, Turkey. Recent financial performance: third quarter 2024, net profit was $1.3 billion, reflecting robust performance despite industry challenges. First 9 months of 2024, the net profit was $2.7 billion. Passengers carried were over 65 million, representing 1.8% increase compared to the same period in 2023. Operational highlights: January 2024, load factor was 80.3%, with international flights at 79.8% and domestic flights at 84.7%. Available seat kilometers: it increased by 10.6% to 20 billion compared to January 2023. Cargo or mail carried: it increased by 24.8% to 148.6 thousand tons from 119,000 tons in January 2023. Strategic development: Turkish Airlines continues to expand its global network, positioning Istanbul as a major international hub. The airline's growth is supported by significant investment in fleet expansion and modernization. The fifth is the Lufthansa Group, which is a leading European airline conglomerate. It has faced a challenging financial landscape in 2024, marked by declining profits and strategic restructuring efforts. Recent financial performance: third quarter 2024, the operating profit was €1.3 billion, a 9% decrease from the same period in 2023. The revenue reached record levels. However, increased costs and competitive pressures impacted the profitability. For the core brand performance, the flagship Lufthansa airline reported a €234 million reduction in operating profit attributed to low yields and intensified international competition. Group passenger airlines: the combined operating profit decreased from €1.4 billion in third quarter 2023 to €1.2 billion. Furthermore, let's consider some challenges such as delays in aircraft deliveries, punctuality issues at German hubs, and regulatory disadvantages, including the inability to utilize Russian airspace, affecting routes such as Frankfurt-Belgium. How about the strategic response? Initiated a turnaround program aiming to save €1.5 billion in cost by 2026. The outlook: uncertainty remains over achieving the targeted operating profit margin of 8% by 2026. For the first half of 2024, we have adjusted EBIT reported a loss of €163 million, a significant decline from a profit of €812 million in the same period of the previous year. The impact factors: strikes by various employee groups and system partners negatively affected performance with an estimated financial impact of around €450 million. The adjusted EBIT margin recorded at minus 0.9%. It has been down from 4.9% in the prior year. Next is strategic development. The Lufthansa Group is undergoing significant restructuring to address financial challenges. Plans include transferring medium-haul jets to subsidiaries like City Airlines and Discover to reduce costs and increasing the use of wet leasing. The core Lufthansa airline is particularly affected, with considerations to potentially cease intra-European flights. Challenges include an aging fleet, high personnel costs, and declining demand compared to international competitors. Industry experts express concerns that shifting focus to low-cost subsidiaries may compromise Lufthansa's quality and brand identity. What are the market position and outlook? Despite achieving record revenues, the Lufthansa Group's profitability has been adversely affected by increased competition, operational challenges, and rising costs. The company's strategic initiatives aim to enhance efficiency and reduce expenses. However, uncertainties persist regarding the attainment of long-term financial targets. That would be all for now. Thank you very much for watching.